Good evening, everybody. My name is Joshua Swearingen, and I am with TUSK Practice Sales. And this evening, we are going to be discussing dermatology M&A market update. As an agenda, we'll run through some quick introductions and a little bit about TUSK, talk about healthcare consolidation in general, and kind of relate where dermatology is to other verticals within healthcare, just to give you an idea of what to expect moving forward. We'll talk a little bit about the dermatology acquisition landscape and then give an overall market update to end our time this evening. But as a manner of housekeeping, this is me, Joshua Swearingen. I've been in healthcare for going on 20 years, much of that within the dentistry space. I've operated in a sales capacity. I've also been the CEO of a large regional dental service organization or group practice. We had 10 locations that I ultimately ran, built up, and then sold off to private equity 5 to 7 years ago. Worked for a large national dental group that was a large aggregator of private practices and had almost 400 locations on their mergers and acquisitions team. And now currently work representing sellers in across the broad spectrum of healthcare spaces. And now currently work with sellers in the healthcare marketplace, helping them to find the right buyers at the right price point with the right triggers in their deals to ensure that they have a really, really solid exit strategy put together for the business they've spent their lives building. As an add-on, I'm also the co-founder and investor in Reverse Aesthetics, which is an aesthetics business, a med spa business in Columbus, Ohio, that I'm very proud of. And I'm excited to one day go through that process with that business. Just to give you a little bit of background on TUSK, we are 14 fully dedicated team members with a broad spectrum of backgrounds, largely in either investment banking or healthcare in particular. We've handled well over $1 billion in healthcare deals over the last 7 years, comprised of around 200 healthcare transactions. And we have roughly 50 or so years of investment banking and M&A private equity experience. If you break down that experience, you can see a really solid group of both large and small scale private equity groups, corporations, venture funds, and family offices as a part of our group. And then on the other side, within healthcare, we have CEOs of organizations. We have people who have been a part of development for software companies. We have people that have operated in management within healthcare groups, and a little bit of everything else in between. So we have a pretty broad experience list to pull from when representing groups out in the space. So this evening, I want to kind of kick this part of it off, just talking about where we've been within healthcare consolidation, really over the last 30 to 40 years in particular. And I think as we're working through this, I think it's helpful for you within the dermatology market to understand that you are to some extent on the front end of this process. And looking at some other verticals within healthcare that are well into the process will give you some line of sight into what you might be able to anticipate over the next 7 to 10 to 15 years within dermatology. As we look at how it is rolled out across healthcare and where we stand today, obviously you want to start with medical consolidation because this is the easiest one to look at. And most estimates indicate that at this point in the consolidatory phase, around 85% of medical offices have been consolidated under a couple of different umbrellas. And those are primarily going to be hospital groups and universities. And I think it's important to consider that that's not how it started early on. Initially, it started as a consolidation of private practices and a couple of practices coming together and then a couple of groups buying those practices, and then they grew and they grew and they grew. And ultimately, at the end of the rainbow were universities and hospital systems, and they devoured pretty much every private practice that was out there. And you now have 85% of that bucket within those two groups. If we then move on to dentistry, it's an industry that's near and dear to my heart. Dentistry is roughly 30 to 35% consolidated at this point, and it's a little bit of a difficult number to nail down simply because there are different descriptions of what consolidation looks like. When we specifically cite that number, that's in reference to the number of groups that have either private equity or venture capital backing. There are a whole slew of other smaller groups that are smaller group practices, 5, 7, 10, 20 locations, that are either debt-backed or private or owned by the dentists that own the practices, and that's very, very common. But from a private equity perspective, around 30 to 35% of dentistry is consolidated. And then when you move on to dermatology, most industry estimates indicate that we're roughly 10 to 13% consolidated within the dermatology space. So you can kind of follow this line of thought all the way through, understanding that dermatology is probably around 7 to 10 years behind where dentistry was, and dentistry is probably 15 or so years behind where medical consolidation started, and on down the line. So when we're talking about the consolidation life cycle, this is probably my favorite slide of the presentation, because it will give you a really good indicator of where we're at and what you can expect over the next 5 to 10 years. And right now, we're looking at kind of a phase 1 platform development. That's 0 to 10% consolidated. Now, remember, we mentioned that dermatology is somewhere in the neighborhood of 10 to 13%. So we're really in the latter stages of that platform development. And by all estimates, there are somewhere in the neighborhood of 30 to 50 large dermatology platforms in existence today who are actively purchasing private practices. However, in phase 1, just so you have a broader base of understanding, this is where your large multi-site groups get kind of purchased by private equity sponsors. These private equity groups are essentially looking for a platform that can kind of operate on its own. There's some level of synergies between each of their locations. There's maybe some management infrastructure in place, usually 2 to 5 million in EBITDA. And these private equity groups will come in and they'll use this as kind of their flagship within the space. And then they'll build around it, adding on smaller private practices to help build mass. So this first phase really benefits those much larger, well-established groups that have some level of infrastructure in place. Phase 2, we would consider the infrastructure and growth phase. And if we reference the previous slide, dentistry is kind of on the tail end of this. Dermatology is at the front end of this. So, and phase 2 is really what we would consider to be kind of the golden age of private practice wealth building. These are going to be your traditional private practices, $250,000 to $2 million in EBITDA. That's probably 90% of the people on this call. And they're practices that can be easily folded into larger platforms, usually single locations, sometime maybe a second or third location in the mix. But this is where your valuations start to increase because you have a large group of platform investors looking to buy healthy private practices. And we would consider this kind of the golden age of selling your practice at the highest possible value. And this is where we really see some level of significant generational wealth creation for a lot of the doctor owners that are looking at partnering with some of these platforms. So, and then the next phase that we would have would be your MSO group consolidation. An MSO is kind of your managed services organization or your medical services organization. There are a million different acronyms that get used throughout healthcare. But this is a situation where your large scale platforms, usually 100, 200, even 300 locations, are not really looking for private practices anymore because there's not enough there to move the needle for them in their with their investment criteria. So instead of buying a single location at $500,000 EBITDA, they may end up looking at a smaller group of 20 locations at 15 million in EBITDA. So this is really the stage where really large national groups are buying, in many cases, small and mid-tier regional groups, but still groups of practices. So very large acquisitions, kind of an exciting time in the mergers and acquisitions space. But as a word of forewarning, if you are not a group practice or an existing platform or something of that nature, this is the phase where you really start to see some degradation of value for private practices. Most of these groups are no longer looking for one-offs. They're looking for 5-offs and 7-offs and 10-offs and things like that. So this is the stage to be a little bit wary of if you're looking at selling your practice. And just as a, to back up a little bit as an interesting example, in the medical space, we know we're roughly 85% consolidated at this point, which is fine. Well, that still means that there are 15% of your practices out there that are probably privately owned, and some of these are the boutique medical groups and things like that. But the flip side of that coin is they're probably extremely unique, consumer-driven businesses that likely don't have a market for purchase. So these groups aren't approaching them because they're so unique or so different in their service offerings that they can't be easily aggregated into the mix of practices they already have. So there isn't kind of that second opportunity to build wealth with the business outside of immediate patient care. So just something to think about. So why, you might ask, is there's so much interest in dermatology? We have a record number of private equity groups that have moved into the aesthetic space. And when I talk about aesthetics, I mean dermatology, med spa, plastic surgery, and there's a lot of crossover within those businesses. So we can look over the last several years and see significant increases in the number of acquisitions from 2016 through 2022 versus the 5 to 7 year period before that, in which case there were very, very few transactions going on. Some of this is driven by the number of solo dermatology practices, but there are some of it's driven by the amount of growth that is anticipated within the dermatology market. It's expected to almost double in the next 5 years. But a lot of it is due to simply the amount of capital that has been poured into the space by these private equity groups. At last check, we have roughly 205 buyers on our list within the dermatology, plastics, and med spa space. Many of those buyers buy in all three of those spaces, and we regularly receive requests from private equity groups and venture capital funds asking if we have deals available, what's available in the market, what we're looking at, that kind of stuff. So we're regularly interacting with these buyers, all of whom are looking for businesses to purchase. As we look at dermatology in particular, we know that we're roughly 10 to 15% consolidated, somewhere in that range, depends on how you qualify it. But we believe that over the next 5 years or so, we're going to see a drop in the private practice one location market from about 80% to 60%. And this is a dramatic move. And obviously that's roughly 1 in 4 practices will be sold. That's substantial. And it's directly related to the fact that we have hit that tipping point and there are now enough buyers in the space to aggressively go after these acquisition targets in a competitive market space. Mid-market, these are your 2 to 25 locations, probably not private equity backed yet, although some of them may be. They currently represent about 15% of the market. We believe that'll jump to 25% of the market. And, obviously some of that's being pulled from your private practice, actually all of it's being pulled from your private practice location. And then your elite groups, we believe will nearly triple in size from 5% to 15% of the market. And again, this is clearly indicative of the amount of capital that is ready to deploy in the space and the number of available practices. We are really hitting the sweet spot for some of these valuation periods. So a couple of key takeaways. Private equity interest in dermatology is going to remain incredibly high. There is a lot of money sitting on the sidelines right now, even with markets the way that they are today. There are a lot of private equity groups that understand the space, they understand the growth opportunity, and they are badly trying to get in ahead of other investors. So as such, we're really entering that golden age of private practice ownership. And I think that that's fantastic for owners like yourselves, or like many of the people that are listening to this call. And then, my last 2 points kind of go hand in hand, in that buyers are going to be very aggressive in attempting to keep the purchasing environment free of competition, and then beware of unsolicited offers. And, some of you may have heard about unsolicited offers. Some of you may have never heard about them and don't know what they are. And it's essentially, you receive an offer from a buyer in the form of either an email or a letter or a phone call or something like that, indicating that they would like to pay X amount for your business, and you should be complimented. They're looking at your business as a reasonable acquisition target. That's fantastic, but also understand that all of these groups are highly incentivized to try to pay as little as they possibly can for some of these practices, so that they can turn around and sell them as an aggregate for significantly more. So the less they buy yours for, the more they make on the back end. So one of the things that we discuss internally a lot is our TUSK val, and it's a free valuation that's available to anyone that really reaches out to us. But what we like to do is kind of take an external view of your business, run a few simple financial calculations for you, and then give you an idea of what we believe the market will sustain. And that at least arms you with the information that you need, that you can go back to your financial planner or whomever with, and have a discussion about, whether the time is right now, whether the time is right a couple of years from now, or whether the time was right 3 years ago. We just want to arm you with the information that you need to make really, really pivotal decisions in this process. So please keep that in mind. In addition, if you have an unsolicited offer sitting in front of you, we are happy to step alongside you, take a look at it, give you a little bit of feedback on it, and then discuss what it might look like to go out to a broader pool of buyers and try to create a competitive environment for your practice, because that's ultimately where we are able to really increase value. It's two-sided. One is creating a competitive environment of buyers, and then the other is ensuring that you're getting full credit for all of your financials, all of the EBITDA, all of the ad backs, all of those things that most of you may not have even really thought about in the process of selling the practices. So all that being said, if you're interested in a free practice valuation, we are happy to provide you with that. You can see my email address at the bottom. You're welcome to reach out to me there. And I will respond and get you a list of items that we need to perform that valuation for you. We are always here to answer any questions market related, specific to dermatology, plastics, or med spa, and are happy to have a conversation and help you begin to plan what your exit strategy might look like. So thank you for incorporating me into your evening this evening. Really appreciate your time, and feel free to reach out at any point.